The three major indexes have now climbed into the green. Just goes to show and prove the resiliency of this U.S. stock market. And Tom Essaye of Sevens Report, a friend of this network, is with us today. Tom, thank you so much. What do you make of this move into the green, and should we reach anything into it?
Hi, Alexis. Thank you so much for allowing me to come on with you guys. This is awesome, the way you guys are continuing to broadcast through all this turmoil. Look, the market's very oversold. It's a bounce. It's great to see some up numbers. I mean, we're all so exhausted from the selling. I mean, it's just a positive. But let's not get ahead of ourselves. We still have a lot of issues we need to work through. There's still a lot of turmoil in these markets. The one thing I want everyone to focus on: corporate bonds. The major problem with this market right now is corporate liquidity and corporate solvency, because what people are worried about is that as the economy shuts down, no business prepared at the beginning of 2020 for the economy to turn off. So there are a lot of concerns about how many businesses will be able to survive. The government needs to come out and more forcefully say that they are going to support the corporate bond market, and they're also going to give the liquidity these companies need to make it through this temporary slowdown. If they do that, then we can start talking about a real bottom in stocks.
Tom, do you think that the government is doing enough, that the Fed is doing enough? And if not, what should they be doing?
No, I do not. They have done a lot, certainly, and they are helping. Things would be much worse if they were not doing everything that they have done. But I believe they need to do one more thing. And the Fed needs to include corporate bonds in its QE program, because that will immediately cease the crash we are seeing in corporate bonds. Here's what's happening. If I own corporate bonds, I own, a big company. Let's call it Ford. They just slashed their dividend. Well, did I ever think that Ford bonds would be falling as hard as they are today? No. So what am I doing? Maybe I'm panic selling. If all of a sudden the government, the Fed, comes in and says, we are going to be a buyer of corporate bonds, then all this illiquidity stops, the collapse stops, and everybody can begin to be rational again. I hope they do it soon. A law does need to be changed for this to occur, but it can happen really quickly, and I hope it does.
Brian, I believe you had a question for Tom?
Yeah, Tom, question over to you here. During all this panic this week, are you out there buying anything? I'm just looking at the Dow 30 right now on our trending ticker section. You could still feel that nervousness in the market, despite, look, the ECB coming out this morning with their own version of a bazooka.
Yes, I have, but I have been buying very small, and I have been buying in accounts that have a time horizon that are multiple years and decades. So IRAs, 529s, that sort of thing. Because again, we are in a panic. Everybody needs to understand that. The panic is well-founded, frankly, because there are a lot of scary things we're looking at. But what do we know about these panics? Over the longer term, they present fantastic buying opportunities. I do not think that the Fed and I do not think the Treasury is going to let this economy and the markets go down the tubes. Now, does that mean that today's the bottom? Probably not, to be honest. But that's okay. We're not going to know the bottom when it occurs at the time, and it's going to look most likely more like a V than necessarily a U. So I am nibbling on the way down, but again, that's for accounts that have very long time horizons.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.